Hello, welcome to Strictly Money at the News Forum, where all voices matter. I'm your host, Saijal Patel. FTX's meteoric rise and stunning crash has sent tsunami-like waves through the cryptocurrency industry. The second largest crypto exchange filed for Chapter 11 bankruptcy only days after what was essentially a bank run, and has now sparked a global investigation as the company faces up to 1 million creditors. So what went wrong? What can investors learn from this? Justin Hartzman is the CEO and co-founder of Coinsmart and actively involved in shaping the crypto landscape. And he joins me now. Hi, Justin. Great to have you back.
Hi, Saijal.
I wish it was under different circumstances.
Absolutely. I think that's the situation for all of us. But listen, this is an important thing to learn about, to talk about, so that we can have informed consumers and investors in the future, working with the right parties to do the right things. So happy to have a discussion.
So the repercussions of this is still unraveling, Justin, as we tape this. So many people were caught off guard. So many people have lost money. Did this come as a complete surprise to you, or was this something that was kind of inevitable?
A complete surprise. It took me by complete shock out of the blue. There were signs that were coming, and you had to put the pieces together that may have warned you. But unfortunately, with so much going on, that was hard to happen. But I feel for all those people out there. Let's say they haven't lost anything yet. We don't know where we are with this, so let's hope that it doesn't get to that point. But it's not looking great right now. But this morning there were reports coming out from Sam himself, and in talk with people he's had discussions with, and people on the inside, and New York Times and others have come out to say there's a good chance that investors will see somewhere between 40 and 55% of their money back when this gets to the end of the road here and they figure everything out. That's also taking off the fees that's going to cost to get there. So, well, not a great outcome. It is what it is, and we're going to see where we land. But this is just super upsetting. And there's so many people that is affected by, and it's the talk of not only the crypto markets, but every market out there. So understanding the reason and the ways that you can protect yourself are key.
Yeah. And Sam Bankman-Fried, we should mention, is the CEO or former CEO that stepped down. Justin, can you walk us through how this happened? Like what went wrong?
Yeah. So if you back it up to the beginning, this is going back a while, Binance, which is the largest exchange in the world, run by CZ. Again, what we think is an absolutely incredible platform with a really amazing technology, with millions of users who are unregulated still. I just want to let everyone know that's the situation with them. They are an original investor in FTX. And part of when they got out, because they asked to get out of the investment because they were a competitor and it just seemed odd on their balance sheet, part of it was $6 billion worth of the FTT token, which is the native token on the FTX platform. And on last Sunday, there was some back and forth. There was some rivalry going on. You know, they were battling back and forth of who was the best, the greatest over Twitter, of all places. And quite frankly, CZ just pulled the rug on him and said, we're going to start selling our FTT token over the next 6 months. And that caused a fever pitch of other people to go, well, if they're selling it, we might as well be selling it. They know a lot more than we are doing. And then when CZ saw that was actually occurring, he decided to start dumping it himself and not taking the 6 months to do it. And because of that, the tokens started plummeting. And because they didn't have enough on the run on the bank, and fully leveraged, they couldn't actually have the withdrawals or have the money there to do the withdrawals people are asking for. So that's when they stopped all withdrawals. And that's always the sign that something poor and something bad is going to happen, because that shouldn't be the case. And if you're a regulated platform, like ourselves at Coinsmart here in Canada, we have to have one-to-one. We can't leverage. We cannot use other people's money for our reasons. We can't lend money from one side of our business to the other. Their funds are theirs in trust and custody for themselves. And they didn't have to do that. And I think, Sam, what happened, there was just a downward spiral over the last little while as the market continued to drop, and he was under collateralized and he needed to have more money than he didn't have. He was pushing user funds from his one company to his market maker, which was losing dollars, which got
and the market maker, that's that Alameda? Is that correct?
That's Alan.
Yeah.
That's right, Alameda. Their trading desk over there. You're absolutely correct. They were in a hole they were trying to come back from, and gambler's fallacy is what I think when I see this, where they were just trying to keep going as fast as they could, losing more money instead of gaining it back.
Yeah. I'm going to get you to hold your thought, and we're going to take a quick break. We'll be right back. Welcome back. Justin, before the break, you were talking about Sam Bankman-Fried. He built this empire. He was seen as this golden boy, and he was seen as being different because it appeared that he wasn't very flashy. Give us a sense of who he is.
Yeah, he was always that guy who seemed so human. He seemed like he was a friend. He always was there to help people. He was a humanitarian, and that's what we thought about him. But looking like that may not be the case any longer, and this may have been premeditated for some time. So we're going to find that out. But he was the poster child. He built something amazing from 2018 to 2020, the second largest exchange for cryptocurrency in the world, with the best technology out there. But we're just starting to learn as of the last few days. There's some pretty interesting things that were going on in the background, including his general counsel being formerly an employee or the general counsel of another company that got into some serious hot water for in the poker space, online poker space, where they had this god account where they would see the players' cards and then front run them and make them lose money, and that was a huge problem. Why would he, with all the alternate resources in the world, hire someone who's been through that sort of stuff before? And there's been talk about that his partner in starting this, his name was Gary Wang. He supposedly has built a back door where this has been going on for a while, where they've been taking client funds and moving them to other places, whether it was for their own purposes, whether it was for their own trading. But it's really interesting to know that he donated so much money, I should say, to so many different places out there. And he just seemed like he was doing the right thing, and he never cared about the money, or at least that's what he said. So this comes as a complete surprise to everybody. I've said that twice now, or three times, and I just we're still reeling from it. We don't know where it goes. And even for me, someone who understands what's going on, I look back and I ask people around me, do you think he really did that? Or this is a misconception, something else went on that we just don't know about yet? It's crazy.
It is, and we know now, there's a criminal investigation. Any guess what this could mean for him?
As of this morning, the DOJ, the Attorney General of New York, SEC, everybody's looking into this, and they're so far reaching, touching so many currencies in so many countries. We don't know what's going to happen. They filed Chapter 11 in the U.S., Chapter 15 in the Bahamas. We're yet to see what's going to happen, but this is all around regulation, and it has to come back to that, and that's the discussion to be had moving forward.
Yeah, absolutely. And I do want to talk about regulation. Justin, though, I can imagine you've been bombarded with lots of calls, and Coinsmart is a crypto trading platform. How's this affected you?
Um, well, we wanted to get ahead of it. First of all, we had no material effect with them or funds with them. So something that we got away unscathed as a company. So we're really appreciative of that. That comes down to what we can and can't do with our money and our resources because of our regulatory status. So we're happy about that. We went straight out there when we announced to people, we told them why they should be using a Canadian exchange, whether it's ours or others, because of the regulatory regime that we have here now. And what we've seen actually is, which is crazy to me, an increase in volume, but not a decrease in assets under management. So people haven't been coming to take their money off the platform. They've actually been coming in this downtrodden market to buy more because they see this as a blip in the road and maybe the bottom after something crazy happening. And we can continue to build a great market and move forward. So for us, it's an education process, which is what we're all about today. But nothing really negative that I can talk to at this point because of the processes and things we have in place.
Okay. I know we're looking at something like 1 million creditors here, right? Lots and lots of people are affected. You did mention this. So there is a chance that some of them could get their money back?
Yeah, I think the fact is that all the creditors are going to get something back, whether that's 10 cents on the dollar or 100 cents on the dollar, we don't know. from good sources, they say it's between 40 and 55 cents. But we're not talking about just like you and me as individual investors having their. This is the Ontario Pension
Pension,
Fund.
yeah. I mean, they
Yeah.
had a very small amount, but definitely making
Well,
headlines.
a small amount for them, but
Yeah,
still $96 million
$95 million. Yeah,
dollars. Yeah,
yeah,
that's still a lot of money.
yeah,
On top of that, you had the biggest hedge funds and VC firms like Sequoia. You've had other people that they went to bail out. We heard BlockFi, they had to turn off withdrawals and they have to file again now for bankruptcy because they can't do anything more. They had money at FTX held there. They had their line of credit that they were drawing against, so they don't have access to actually do what they're doing. So this is going to have long tail ripple effects. But what it's going to do is strengthen the market with the right players doing the right things.
yeah.
Not how I would have liked to see it done, but it's a catalyst.
Welcome back to Strictly Money. I'm here with Justin Hartzman, CEO of Coinsmart. Justin, we've been talking about regulation a little bit, and here's the thing, right? We're seeing a lot of finger pointing over this collapse. Regulators are saying, look, there's nothing that could have been done because FTX's parent is offshore and it's based in Bahamas. So, what's your thoughts? What's your response?
Well, the industry for a long time, the players, other people, other platforms, have all been playing regulatory arbitrage. Where can you go and be the least regulated but regulated at the same time, or not regulated at all, so you can do what you want to do and provide what you can? And quite frankly, I was quite upset with regulators for a long time, and this has gone away a little bit in the past and reaffirmed now because they were stammering our innovation. Like the fact is, Canadians couldn't get access to the products that were being made available at Binance, FTX, Darebit, and other places like derivatives and futures. But at the end of the day, I do have to, hat tip off to, the Ontario Securities Commission, the CSA, IROC, where they've stopped us from being able to do that. And that's really protected the Canadian consumer or investor much more than others. So while it's a pain in the butt and we can't grow and do some things that are interesting, it certainly has been a way that we can help them do the right thing. So regulation is super important. Working with the regulators and talking with them, that's something that we've been doing a lot together as all the platforms in Canada, speaking to the regulators in unison and as an orchestra coming together. It's been really great to say, here's what we want to do, here's how we want to do it. How can we work together to protect the investor and still provide the product they're looking for? Because the problem is, people were coming to us and doing their regular crypto trading. They can do spot trading, OTC desk, all that sort of stuff. When they were taking that money and then sending it offshore because they want to do everything they were doing there. So if we can find a way to do it onshore the right way, we can protect them in the right ways. And that's really what we have to continue working on as we move forward, building product and services that the consumer and investor wants in a regulated fashion to keep everybody safe and secure. And I just want to say one thing. I think it's really important to know. There's one term that's always been in crypto, and it certainly is the case today more than ever. Not your keys, not your crypto. If you have their money somewhere else doing something that they have, you don't have access to that, that's sort of your problem, or all of our problems, not mine included. So if you have crypto and you want it and you're not using it for something specific at that time, take it off the network, put it into cold storage, sock it away. Your keys, your crypto, and it can be really safe in that way.
Yeah, and that's a question I was going to ask you. What lessons can investors take away from this? That's certainly one.
That's one. Two is, do your research, understand what it is that you're getting into. These are complicated products that people are going into without the knowledge of using them. And that's why regulators don't like it so much until they figure out the right way of doing it. So if it's something that seems like if you couldn't do it in the traditional market because you don't understand it, this is not the place to do it because you have access to it. So make sure you go within your limits. Understand that when you come to our platform, we're going to understand the suitability, understand if you can't, what your time horizon is, your loss limits are, all those sort of things. And we only let you trade within those. So really understand, don't try to get around that, and come to this knowing that if you do a trade and you are storing coin, you want to keep it for the long run, keep it offline, like we said, not your keys, not your crypto.
Yeah. How do you think the regulators will respond to this, and how do you think this is going to shape regulation? Because this is a wake up call, no doubt.
Well, that's for sure. And, I've had multiple calls with the regulator our teams have over the last week on completely separate things. And everything that comes up goes, well, you know, we are still dealing with the stuff that's happening on FTX that we're still trying to figure out right now. We're not sure if we can figure this out and get it done when we thought we could. And that's really disheartening because we are on a path and we're doing it the right way. But regulators are always on the back foot. They're never on the front foot. They're always leaning backwards. So we got to help them get them up straight, give them the information they need, get them on page, and then let them tell us the right way to do things with our input so we're providing the right stuff.
And where do you see the gaps? I know we only have 30 seconds, so we can continue this, but where do you still see the gaps and where we have to proceed with caution?
I think that we have to ensure that we let the market consolidate so there's less players and there's the right players doing the right things today, instead of having it so dispersed in so many long tail different platforms that you can go to that might not be as regulated as the ones that are working towards that. And we see that in Canada, but that's happening right now.
Okay, still a bit to unfold, so we'll take a short break and we'll be right back. Welcome back. Justin, there's a dark cloud hanging over much of the crypto space, right? Bitcoin's down 70%, Ether, Solana, and there was a lot of skepticism and fear before, and this has just added to that. How long does
That's
this last? How long
yeah.
could it
Well,
last?
2022 has been a tough year for cryptocurrency, that's for sure. There's been so many different collapses, the market downturn, and this is all financial services, but it's been exaggerated, I think, even further in crypto. Um, I think we could be in crypto winter for the next 12 months for sure. If you would have asked me that 2 weeks ago, it may have been another 6 months. But with the current and outstanding issues that we're having, just unfolding what's happening with FTX, we really need to get everything settled and move forward. And I think really what has to happen and will happen over the next 12 months is the strongest are going to survive. Regulation is going to prevail over everything else, and we're going to move away from all the really novel products out there that are interesting, but seemingly not even seemingly now are too good to be true. 100%, 500 times leverage, 100% APY on your saved funds. And what we're going to get back to is the basics: institutions getting in and understanding how to use it. Blockchain as a technology we integrated into everything that we're doing in this world, which is super important still, and we haven't come off that. And that's the underlying technology. But more importantly, having crypto used in a day-to-day way versus this speculation. And I see that. And that's really where we put a big bet at Coinsmart last year, which was payments. And that's a big part of our company now, where we're offering places like retail stores online, retail stores in brick and mortar, online stores, the ability to take crypto in as a payment option, which there are no chargebacks. It costs way less and gives people another option to spend their crypto and use it in a day-to-day basis. So I think that's really where we're going to see the next big spike in crypto and help bring it back to where it was last year and then start moving on from there.
So does that mean that there's inevitably ones that are just going to have to fail?
Unfortunately, I think that if you're looking at anything under the top 15, 20 market cap today, those are ones that you have to be very, very wary and careful of. Do they have proper utility? Is there a rationale for them that makes sense on a mass scale? Is there a community behind them that's growing that and developers that are doing it? If you don't see all that there, and those are sort of the things that we look at when we list a coin on our platform, how often it's updated, how it was funded. If those aren't things that seem really solid to you, it might not be something you want for the long run. Maybe you're speculating in and out of it in a short basis, and that might be fine. But really stick to the top. For me, it's Bitcoin, Ethereum, Solana, and my list sort of stops there for long-term holds. And again, I'm not giving financial advice, and I would never do that. Just talking about personally what I think. Let's look at what those are. the rationale for them, and what they're doing in the market today, and can they keep up and stay there? And that's what I would look at.
Okay. Yeah, I guess for investors who still believe in crypto, what do you say to them? And I guess how do they get in? You mentioned those three, but do you think
Mhm.
it's wise to just find a fund or ETF? We know that, ETFs are
Well,
available, certainly here in Canada.
yeah, those are options for sure. But again, not your keys, not your crypto. What happens in those situations? Have they lent the money out somewhere else? Where are they storing those funds? And frankly, I think they are doing the right things because they are under regulated regimes. But for someone who's just getting in, do it slowly, do it smart. Make sure it's something that's not an afterthought, but you've really put some effort into doing it, and make sure it's a small piece of your portfolio. Don't go all in. That's a really silly thing to do. Grow it over time when you feel confident.
Yeah, absolutely, right? You don't, I mean, this is risky. It's high risk stuff. And I think sometimes people forget about that because they let the FOMO and, greed and quick wins or hope for quick wins, kick in.
I think you said it very well there. This is Don't do it. Don't go all in. Don't bet the farm. Take small pieces at a time. Understand it, and then you can continue building from there. You haven't. I still think, and maybe we even backtracked a little. We're still in the, you know, just getting to the second inning in this game of crypto. It's
Yeah,
still very early. Um, understand that it's not all
yeah.
or nothing. You haven't lost it all. We've seen Bitcoin at 70,000. It's down to 17,000 US right now. It can get there and well past there in the future as we continue to build this market. So understand that and do it smart.
Okay, Justin, we'll have to leave it there. Appreciate your time. Thanks so much.
Thank you. Appreciate being here.
Well, thanks for watching. Until next time, stay well, stay wise, and stay wealthy.